welcome audience to an ET-CFO digital boardroom session. This is on the FMCG business, what to expect from the FMCG industry in the next 5 years. We are joined in this boardroom discussion by top FMCG CFOs. Let me introduce you audience with all of them. We have with us Mr. Abhijeet Kamasamudram, CFO at McCain Foods. Next, we have Mr. Umesh Sharma. He is the CFO at Jubilant Industries. Hi, Umesh.
Hi, good afternoon, everyone.
Yeah. Next, we have Mr. Sanjay Agarwal. He is CFO at Jyoti Laboratories. Hi, Mr. Agarwal.
Hi, thank you, Manu, and good afternoon to everyone.
Mr. Manish Ojha, CFO Amul Dairy. Hi, Manish. So I have Mr. Ashish Jain. He is CFO at KRBL. Hi, Ashish. I hope you can hear my voice.
Yes, I can, and I can see you as well. And hi to everyone.
Great. So without much ado, audience, we all know that FMCG industry is among the fastest growing sector in the Indian economy. Its importance cannot be under highlighted, and the FMCG industry has been growing in double digits, and now it's up and reviving on the renewed demand post pandemic. So how the CFOs are looking this industry in the next 5 years? What challenges they are bracing for? That is all going to be debated. That is all going to be debated by the top level CFOs here. So let me start with Mr. Abhijeet to take your view in respect of your industry. So Abhijeet, if you could just start this conversation by giving a heads up in terms of what are the trends that you are looking for your industry, and how are you sort of preparing for those trends? Yeah.
Thank you, Manu. So I represent the food industry, where the first thing that is happening is tastes are completely changing. The profile of dining also has changed because of various parameters, be it COVID. What used to be dine-in, slowly the complexity has now moved into delivery, aided by a digital explosion. Say lots of experiences, people are benefiting through delivery. And convenience has also significantly improved. So what we observe is the pattern from a logistics supply point of view has moved from an in-store experience to a delivery mode, and aided majorly by digital mode. Second, in the food business, lots of action on dark kitchens, cloud kitchens, so that consolidation significantly is helping lots of outlets to come onto the vendor database, and in a way also help the consumer get a larger profile or a palette available. Third, what we see is changing tastes of the consumers, far more health conscious, very, very particular about the ingredient profile, very concerned about the sourcing of the products or ingredients getting into the thing, that's into the final product. And there are also lots of simplification and SKU rationalization that the industry is doing, because menu sizes are becoming very, very complex, and it is practically not possible for the organizations to keep providing too many products on the menu. I also see lots of loyalty programs coming up as a to hold on to the customer base by the organizations. So some of these trends are definitely going to continue into the upcoming period. Technology is going to significantly aid them. We've seen, for example, we did on a metaverse, we did a Holi event, okay, and slowly other organizations, if I cut across not my industry, others, we see Volvo now coming on with his XC40 on a metaverse. So the digital explosion is going to be the new one, where social media, digital profiles will be made, and that's how intelligence and analytics will aid consumer patterns, consumer behaviors, and eventually supply to those points.
That is a very comprehensive view by Abhijeet. Thank you, Abhijeet, for setting this narrative. I'll just quickly go to Mr. Umesh Sharma. Umesh, what is your take on where the path for FMCG industry is headed? Yeah.
For last, you would have seen for last 1 year, or maybe a little more than 1 year, all the FMCGs are companies facing a lot of headwinds, and in terms of higher inflation and the input cost. But despite that, the company have been able to sail through by, you have seen multiple price hiking in most of the FMCG sectors. And barring few sectors, we have seen, or what I have seen is that the real volume growth is not coming. The growth, what has come is by price-led growth, where the volume are more or less is kind of flat or marginal growth in volume, barring some segments. But being the base being the low because of the COVID, when we see that the growth in terms of percentages looks high, because the base effect is being low. But otherwise, what we are seeing is that the companies, the sector is facing tough challenges. The input costs have gone up multi times. Although we have seen off late, maybe very recently, that the input prices are coming, down. There is some cooling happening. But in the system, there are a lot of inventory because of the old, the high cost inventory is still lying in the system. So despite the cooling in the input prices, I don't see any kind of price reduction happening in the goods. I believe the company would be first focusing in regaining the lost margin, and thereafter, if anything is left, I think need to be very, very, calibrated price increase that we may think of passing on to the customer. Customer preferences are also changing. The price sensitive customers are very choosy when we go to the market, and they are looking for, what we have seen, the smaller pack is becoming a kind of preference for the price sensitive customers. And that is a big challenge for us. More than the cost, the innovative packaging is also becoming very, very, a challenging trend to to keep your customer happy. You would have seen the many companies have come out with the small packs, and there's no exception to it. But the period is very, very challenging. Let me give you the kind of thing what we are passing through. The growth, as in volume, it is not growing. We have highest level of inflation for last many years. You would have seen the inflation in last 4 to 5 years, it was in the range of 4.5%, whereas the current inflation is close to 7%. This is being very, very high. The geopolitical situation is very, very critical. The demand supply disruption is happening, leading to the cost increase and all. So facing a lot of challenges. But what I expect, when the input cost, the low cost effect is going to come in, maybe close to third quarter or maybe fourth quarter of this fiscal, and going forward, we can see there's some kind of price corrections happening, and the consumer may coming back to the brands, and the margin expansion will happen, but it will not to the extent that the cooling off in the input cost. So it's a big challenge for the FMCG companies to to keep maintain a healthy EBITDA margin in the increasing cost and increasing inflation scenario. But still, we are working on it. The cost, the COC reduction is one of where the companies are focusing, where you have to optimize your cost. The spend has not increased in last many years on A&P spend, but still, I believe there is some more time that it will take. Festival season is coming up, so some spend will be there in that. And I hope that fourth quarter onward, we'll see some kind of instead of price-led growth, the volume-led growth will also be happening. And it's too difficult to predict 5 years horizon in this such kind of volatile economy. But what I feel, maybe after 1 year from now, we'll expect a price correction happening, and the demand growth is happening. The EBITDA margin may increase, EBITDA growth may happen, but EBITDA margin may not be that increase in that much. That is my expectation is. But very volatile, but very challenging. But at the time, very interesting to see the kind of consumer behavior what we're seeing in their demand and their expectation from the companies.
Okay. So Sanjay, that is a very important point in respect to the challenges that you mentioned and the backdrop that you've given while sharing the perspective for the next 5 years, in particularly next couple of years, so to say. So let me then now quickly go to Mr. Sanjay Agarwal for his perspective on the FMCG industry next 5 years. Yes, Sanjay.
So next 5 years, I think we all have seen, as far as the growth is concerned for this industry, we all have seen a good growth in the last many years and many decades. And if I have to look at next 5 to 10 years, I think we'll have a super fast, I mean, this industry will have a super fast growth. And therefore, maybe you want to add the word super before the FMCG. So it can be super fast moving consumer goods. And why I say that is because the whole transition or the pivoting has happened in this industry, wherein you may see in the next 5 to 10 years, the number of brands which would be coming, and we cater more to the home and personal care. But if I'm talking about the whole industry, you will find a lot more number of brands which will keep coming, which will meet the needs of specific consumers. So, one, obviously you have mass market products, but then you also will have a lot of brands catering to the specific or niche brands, which will see a good growth, and that will come on the back of innovations. The companies will go for getting higher growth for their portfolio. So I think that is one thing which I see on the brand's perspective. The other thing which we see happening now, and my other panelist Abhijeet spoke about it because of the digitization and everything, that the whole distribution, which is one of the big modes of large established companies, that is getting challenged. Distribution is becoming very fast, and therefore you have got alternate distribution channels now. In fact, even if you look at the traditional general trade stores, even they have seen a massive opportunity in their business, and they have also upskilled themselves. So today they have got their entire product portfolios on an app. Consumers can give the orders on WhatsApp to them. So what I'm trying to say is the whole supply chain distribution is getting much faster, and therefore that the super fast is what I look at it in the next few years. I mean, then you can keep adding because the whole ecosystem of FMCG industry is getting a big change because of the infrastructure development which is happening. I mean, we heard about logistics becoming much smoother. So all in all, historically, we have always seen FMCG industry growing at 5% plus GDP, which definitely with the GDP now poised to grow much faster. So we should see much better days for FMCG industry for all the participants.
Okay, so much better days and super fast. Now there is some sort of encouragement reflected by Mr. Agarwal. Is that sort of encouragement also reflected by the next CFO, who is Manish Ojha at Amul, is what I want to know. So Manish, do you concur with the same sort of encouragement and enthusiasm reflected by your previous CFO?
Thanks, Manu. Actually, I do fully agree with Mr. Sanjay, what he told about the growth aspects as far as concerned. And we are Amul basically in food industry. And actually, we do not work on extremely high margins because we make the ultimate payment to the farmer, paying in the best price of the milk to them. And this is the livelihood of the farmer. So if you see, FMCG sector has been evergreen. It's considered as an evergreen sector, and for last decades, it has a good growth. In my opinion, as far as consumables, in terms of the eatables are concerned, what we produce, definitely it's going to be a very good market in coming 5 years. Because just to share with you, during the period of the corona, where every business was affected adversely, we were the highest seller of chocolates and the cheese that time. Because the people sitting at home, I'm not sure what exactly they were doing with the cheese and chocolate, but it was ever highest sale during that period. Apart from that, if you can see, since during the corona, the people learned to interact each other through the Zoom meetings, through mobile apps, and they are much closer to the technology now. So all the products are being advertised through the social media, and that's encouraging the people to get the more products of eatables like Amul. And one more interesting thing I would like to share with you, that is approximately 55% of revenue is shared by the urban area, where 35% of population is there, and approximately 65%, approximately 45% revenue is shared by from rural area, where still 65% peoples are there. So still there is ample opportunity for FMCG industry to penetrate further. The need is only to enter the area, to get themselves digitized so that the cost can be minimized. Also agree with the Mr. Umesh, the prices are really gone very high, especially power and fuel and packaging material that has been increased 2 times or even some 3 times. Apart from that, the government has declared the minimum wages. They have increased the minimum wages. The government has increased the minimum wages. That's resulting in high labor cost also. So in overall, with all the challenges, if I foresee the future or any FMCG industry in food industry, the growth is maximum. And secondly, after the corona, the people like more, they have inclined more towards the packaged food, because they want their food to be like pasteurized food and whatever the non-contaminated food that way. So all these things have, due to that the people have inclined toward the packaging food. So with all the mixture of everything, despite of the challenges of the cost increase and low EBITDA, what Umesh has told, still the growth is extremely high, and I'm very positive for next 5 years. And we hope food industry will be having at least 50 to 60% growth in coming 3 to 5 years at least. So this is my overall area. Thank you.
Okay, 50 to 60%, that is again a very encouraging sign and enthusiasm. Let me quickly go to last but not the least, Mr. Ashish Jain, CFO at KRBL, to take his perspective of what he thinks of the FMCG industry.
Yeah, thanks, Manu. So KRBL, as you know, runs the India Gate brand. So I think most of the trends have been covered by Abhijeet, and I think also from Amul side. I'll just add sort of the rice perspective to this, which is slightly different from what others may have said. See, as most of us know, rice is a staple in India. Also, most of us know that most of the consumption of rice still happens in the loose form. So one of the great opportunities that we have in front of us is to drive this consumption towards packaged form. Right. And as has been mentioned, even prior to COVID, and then COVID kind of accelerated it, there is a huge preference emerging for consuming everything in a packaged form, and rice is no different. So we see consumers who were earlier hesitant, either because of price or simply the fact that there was a perception that packaged goods are more expensive, now converting more and more. The other significant trend in the same direction is that even what we call the HoReCa segment, so that is the hotel, restaurant, etc., even those institutions which are historically very price sensitive have been sort of takers of packaged rice. The other aspect which applies more for us, but probably not for others on the panel, is that even though rice is consumed by majority of the country's population, if you look at the distribution reach of packaged rice today, it is a fraction of what other food products enjoy. Right now, that's historically because it's been perceived as a more expensive option. So typically, it's been sold mostly in urban areas. So there are vast swaths of the country where the product isn't even available. Right. So I think I see that as a huge lever for growth. And third, which I think is an opportunity which the country as a whole has probably not woken up to, is rice-based products. Now, if you travel to other parts of Asia, especially Far East, etc., you realize that there's a huge propensity for rice-based snacks as well as other products. Now, these are the two benefits of the fact that they convey the nutrients of rice, plus they also bring all the nutrient benefit. They also bring the convenience of snacking. Right now, that in our view is a completely unexplored category, but can be potentially huge. So to summarize, I think most of what others said applies, but I just trying to kind of give it a rice flavor to the conversation.
Okay, that rice flavor is a very nice flavor, in fact, I must say. So that's, I think, completes the overall complete picture, a comprehensive picture of the perspective the FMCG food as a whole carries for the next both short term as well as long term 5 years. So let me now quickly pick the theme of inflation, which in today's time happens to be the CFO's best friend. So I'm sure you all would have interesting perspective on that, and you already have sort of mentioned that while sharing your perspective for the FMCG industry. So Abhijeet, let me again start with you. Inflation, you again represent, of course, food. So if you could just tell your Brahmastra to tackle this inflation, and what is your view as a CFO on this monster? Yeah.
So inflation is common across irrespective of industry, majorly driven by one, crude oil challenges because of the geopolitical situation. In our case, or in many other cases also, weather is significantly impacting. Climate change is impacting and leading to inflationary trends. So, which is, for example, potato. If you see the heat that is prevailing in the entire European continent and untimely rains, for example, if we were to have 15 millimeters of rain in certain parts of Punjab, we had last year almost 70 to 80 millimeters. The gradients, 4 times or 5 times higher than what the normal rainfall was. All that climatic changes certainly have an impact on the supply and availability, and hence inflation on account of it. Because of geopolitical situation and challenges, government interventions have also changed. Availability of gas, pricing on gas, untimely changes by the government of the gas prices has also aided inflation. And we come from food industry, majority of which is palm oil driven, and most of it is imported. The impact of inflation, currency, availability, everything has had a bearing on the inflationary part. All apart from this, we also have, because of Corona, be it financial risks, lots of the people whom we interact with may not be existent. For example, outlets that were available earlier, where we used to go and dine, are closed now. That causes lots of financial risk, maybe receivables, etc. That has a bearing of inflation on the organization. Supply risks, lots of commitments, lots of contractual obligation challenges. Overall, all of these in certain form have had an impact on the structure of inflation, and hence the way we have to do is how do we play with the supply and pricing in such a case. What is the Brahmastra that we have used is, one is foresight. Okay. What could be the areas where we likely are going to see inflationary impact? More so in our cases, if I see heavy heat in the northern part or in the northern hemisphere and impacting parts of European continent, that will have a supply challenge that eventually will have my commitment challenge to respective consumers or customers. So how do we anticipate cost trends on account of such challenges? And then pricing. How do we deal with the volatility of these inflation in such situations? SKU rationalization, because eventually we cannot pass on the entire price hike. Price hike does play a big role. You can't keep on passing the price increases to the consumers. There is a stage where they will stop buying. Alternate mechanisms. How do you do cost optimization in your portfolio so that you are able to ensure margins are intact, service levels are available, etc. And then systems and processes. Some changes that we did is standard costing versus actual costing, visibility on the allocation of our variances, etc. That gives us far more knowledge on customer profitability. And with customer profitability very well available with us, we then have an option of going and allocating our limited resources to whichever customer gives us maximum profitability. These are some of the areas that we've tackled: foresight, pricing, systems and processes, and culture also. How do we go and react instead of being reactive? How do we be proactive? Are the areas we have used to tackle inflation.
Okay, so reactive, I mean, of course, you have not been. Proactive is what you have been. So I will go to Umesh to take his stance on inflation. I'm sure he is also going to be saying the same, but what is his view specifically on the numbers? Does he see inflation pain going down significantly in the near term?
Yeah, thanks, Manu. Currently, I believe the trend, what is expected is that the inflation would be in the range of close to 6%, what we are expecting by the year end. And if you look at the last 10 years trend, it has been more or less linked with the crude prices. There are a few more challenges which are happening. But in 21, 22, when even the crude prices came down, the inflation worldwide, in India, still the crude remained on the higher side, and the government didn't reduce the prices. And that's why despite the lower crude, the inflation was equally around 5% in the 2021. So it is around 6%. I don't think it is going to come down below 6% in the near term, where RBI definitely is trying to bring it below, close to 4%. The best way to handle is to, that what my co-panelists rightly said, that we can't always pass on the entire increase to our consumer. So we have to, work internally and to see how best we can absorb something. The one important thing what we have done is that the supply chain plays a very important role in this, whereas sometimes we have done opportunistic buying. We are having, the forecasting the trend of the input, which is going in my finished goods, and buying in the bulk when the opportunity is better, so that to optimize my cost. That's what we have done, and it has really helped us in, managing the inflation to some extent, where the long-term forecast, he rightly said that the forecasting and the foresighting was very, very important. And some of the key ingredients where you buy bulk and get the advantage, and you keep on, maintaining your cost. The second, what we have done is what we are doing is maintaining keeping the COC under control. We are not letting it go out of control. And sometimes the digitization, which is helping, the lowering the logistic cost. So these are the 2-3 things that we have done, to keep the inflation under control, and partly passing on to the consumer, partly absorbing it. So it will help us, in keeping keep moving in the industry.
Okay, that's a nice perspective. Again, I think Ashish is going to give us some rice perspective. So Ashish, please go ahead.
Yeah, so I again agree with Abhijeet and the other panelists here. We don't see the inflation coming down. I mean, very hard efforts are being made, but I'm not sure what the immediate impact is going to be. So having said that, the impact on our industry is slightly different. I mean, inflation obviously has an impact, but our exposure is principally to one commodity, which is paddy, which is a raw material for rice, and that has a very strong price cycle, which makes it a far more important factor than the general economic inflation. However, while that's so therefore general inflation is not so much of a concern from a raw material cost point of view, but of course in any customer facing business that is going to affect demand. However, so far we've not seen any discernible impact of inflation either in the form of down trading or in the form of smaller pack sizes, etc. So we've not seen that so far, probably because the product is a essential and also a staple product, maybe because of that reason, but that's our experience so far.
Okay, next I'll turn to Manish. Manish, what perspective you have on inflation? And if you could just share your learnings as well from the pandemic period, it continues to be high. So yeah.
Manu, I think the inflation is a constant for everybody. So everybody has to face the challenges due to the inflation. And as far as interest rates are concerned, the repo rate, I think it's 5.4 now, if I'm not wrong. And estimated is 6% approximately, what Ashish just told us. So accordingly, from interest point of view, I don't see any challenge. But yes, from raw material point of view, for packaging point of view, for power and fuel point of view, it's really adversely impacting the profitability. If I see my profit and loss account, then the highest cost rise is only in power, fuel, and packaging, and also in raw material, because we use the milk for most of the products, and we are a dairy industry, so milk is our prime raw material. So just 2 years back, we used to pay something around 660 kilogram fat. Now we are paying 760 per kilogram of the fat in just 2 years. 100 rupees increase is there. So it's impacting the cost increase in any way. But I still feel there are a lot of opportunities behind this, and there are certain good things we can do in order to overcome the inflation, like the use of the digitization, where we have drastically reduced the costs somewhere, and also we strengthen our processes. And apart from that, we also try to make the new products which really attracted the customer a lot. So I feel if we really want to overcome with the inflation, the best way is to increase the production and increase the sale, because if your contribution is negative, then obviously the profit maximization will be there. Now, I think food industry should forget to earn the higher profit on single product. The profit margin is going to diminish in times to come, but still a lot of penetration has to be done in the market. And I think we have a good opportunity to penetrate further, to make the use of the digitization and to strengthen our control, and through digitization to stop the revenue leakage. These are only the way by which we can control the inflation. So, from my side.
Okay, before I go to Mr. Agarwal for his quick comments on inflation, do you also see inflation stabilizing 6% in the near term at least?
Next year, I believe approximately it should be there.
6%. Okay. So, Mr. Agarwal, if you could, share your perspective in respect of what you think of inflation monster and interest rates as well, rising interest rates. Yeah.
Manu, I think I'll not repeat in the interest of time. Everybody, I think all the panelists have spoken very well. The actions which one can take if inflation is going out of hand. But, as India, we have always seen some inflation. And we as a country and, all individual at personal level also are used to a moderate level of inflation and high interest rates. So to that extent, yes, our economy is, used to that, and we have our playbook to do. But yes, this time it has been unusual because it's not only crude oil prices, which obviously we import, has gone up, but even the paper prices has gone up, and even packaging costs have gone up, transportation costs, and every palm oil prices have gone up. So this is the first time when every raw material for any industry, whether we're talking about foods or we're talking about home and personal care in FMCG or any other industry, everywhere you've seen the price rise being there. And therefore, yes, this is unusual situation. And I think it's been there for last 12 to 15 months. And I think every company, every businesses have had their ways of tackling it. We have also done, as digitization and cost rationalization, some passing it on to the consumer. But I think one important aspect I want to add here is these are times which will also pass. And therefore, it is important that we grow our business during these tough times. Everybody wants to grow it, but in our particular case, we spent on A&P much more than what we would have done last year, because this is the time to grow focus on your volume share or market share. And we believe that we have done decently well during these tough times also. Yes, margin has been a concern, but something which is in your hand is what you can control. What is not in your hand, you have to leave it sometimes and focus on your core business. So I think focusing on your market shares of our products and our categories and businesses is important during these times. On interest rate, well, I'm not an expert on that. All I can say is most of the FMCG companies are cash rich in that manner. So we don't have too much of debt burdens. So we don't monitor too much on the interest cost. But having said that, I think we should be happy that a country has got decent liquidity availability, and for right projects, businesses are able to raise money. Both equity and debt markets are very conducive for that. So I again will be on optimistic note, tell you, Manu, that these things will come and we have to face them. But in long run and even in medium term, our businesses, at least the FMCG industry we all are representing, has a good potential to grow.
That is a very well laid down perspective, Mr. Agarwal, and thank you for waiting, in fact, for your turn on this one. So let me, in fact, start from you on the next theme, which is of the CFO's equally parallel, bestest friend, if I were to say, along with inflation, that is digitization and sustainability. So what is your sense of the digitization theme? You, of course, everyone has so far spoken about the importance and the relevance. So what does digitization mean for you specifically as a CFO, and where you are in your journey so far? Yeah.
So I think all of us understand the power of data now. It's been some time, and obviously during COVID time, all these things got accelerated. So I think we all have graduated to a level where there's a lot of data which every company is getting generated. So we need to leverage that data, and the best way to leverage the data is, there's so many MIS reports which come to you. One needs to analyze them in detail. We have digitized our sales, we've digitized our production processes, logistics. So all that is not only it reduce the cost, but I think it also makes you future ready. And I think that has been our journey. We've implemented the Salesforce automation, SFA, so all the sales guys get their orders on the apps. So it's become much easier for them for us also to monitor the productivity of the sales. So all in all, I would say that we all can improve a lot more on the latest digitization methods which are available for growing a business. And on the sustainability side of it, I think, again, when we talk about ESG, I think S and G have been spoken a lot. I think now it is the E part of it which is getting more importance. And for any responsible company, we also are taking measures of reducing the carbon footprint in our packaging, in providing or using electricity through solar roof panels. So I think those are ensuring there's a green cover. So this is not only just because it is fashionable to do it, or it's good to talk in these panels, but I think where we all deal with consumers today, consumer also wants to deal with companies who are more responsible. So I think that is where we are in the journey. Obviously, it is long way to go for all of us, but we are completely committed.
Okay, you are completely committed. Mr. Umesh, I would like to turn quickly to you for your comments on digitization and ESG or SG.
All co-panelists share the digitization is today's the days for digitization, and all the companies are working on it. We are definitely working on it, improving the overall ecosystem in the organization to give a better experience to our customers. And even in some time, it helps in in improving the ROI for your distributors also. When you improve the logistics system during the digitization, your distributors had to maintain a lower inventory, and in terms he get a better return on his investment. So the digitization within the organization, for even we are trying to reduce trying to make it paperless kind of office where the workflow has been defined through the various systems and through using the ERP. So a lot of focus on digitization, and even some BI tools have been also used for better forecasting, and which help us in reducing the inventory levels and managing the better working capital also. Everything is saved is going to add to my bottom line. So we are trying all the areas being digitization. The focus on that.
Okay, and a quick comment on ESG, like, you know, if
Yeah,
you want to
ESG, we are very focused on ESG. You know, the way the awareness is growing across the world about the saving the environment and the social environment and climate. So, like for plastic waste, one of the co-panelists said that we are working on it. The plastic waste management system. What we do here, wherever through the packing material, whatever that we sell through the plastic packaging, I think 1.5 times of those plastic what we sell through that, we get it collected across the country and send it to the recycle agencies. They're recommended by the government to get this recycle. Even for the water, what we draw from the ground, there's an obligation to recharge the water 2 times of the water that we draw from the ground. And what we do, we adopt some of the ponds in the villages, and we recharge the water. The recharging of water is, putting all the water, ensuring that all the rainwater goes into those ponds, and ponds are full of water. So whatever we draw for our production or consumption, twice of that water, we ensure that it is being recharged into the ground. So that how we are also ensuring that we are not, consuming more water just to, keep the earth sustainable, and it may be sustainability point of view. If you look at the carbon footprint, even in the boiler, or even for our some of the product, instead of using coal, we are using the waste of agriculture produce. Sometimes, for example, the rice husk is also used as a fuel, where the CO2 emission is much less as compared to carbon. So these are the steps what we are taking so to ensure that the climate remain, safe. And the company remains sustainable. And
Okay.
so that's how there's some of the steps we are taking, and we are ensuring that we are compliant with that.
Okay, encouraging to hear your steps. So Abhijeet, for your quick comments on digitization and sustainability. Yeah.
Yeah. So digitization, for example, we've seen significant improvement. Today, we are talking about smart farm practices. I am in a position to know through digitization what is my soil quality, what is my weather conditions, will it rain in the next couple of days, what should I do? That is being far more energizing and helping the enterprises in moderating their approach towards farm, towards harvesting. When I talk specifically, when it comes to digitization in the distribution or supply chain setup, we today are in a position to go and give input or feed to respective partners in the value chain of whatever the temperature of the vehicle at every point of time, because the product that we transport can get into temperature abuse at every point of time. So this is one form of in the supply chain model. In the plant, at the plant level, we are in a position through digitization able to know what's the good product that's in the on the conveyor, what product needs to be taken off because it's not the quality measures. The digital equipment today is supporting in all this, even in preventive maintenance. So digitization, Power BI, from a data analytics point of view, is significantly aiding the organization in various elements, be it knowing what the consumer insights are and where do you go and start supplying, and how do you go and plan your A&P spend, etc. So digitization is playing a large role in every function that the organization operates.
But we have received a lot of questions from our audience, and we are overwhelmed by that. So let me quickly start taking those questions quickly, and I would encourage each of our CFOs to quickly, take those questions in their best capabilities. So one of the questions that we have received is from Annapurna Majumdar. She's saying that how can the FMCG companies address the challenges of compliance in the digital era? So, so Manish, you want to take that?
Let me first share the picture of the digitization in a brief where we have used it, and then after that I will come toward the compliance part. So no doubt digitization is important for the purpose of not only for the purpose of the revenue, stopping the revenue leakages, and also for the cost reduction and etc. So actually we are having a number of veterinary doctors here who are giving the treatment to the cattle here. And earlier we were having some call center, and farmers used to call the call center for the purpose of the booking of the veterinarian. Now that call center has been abolished. There is no call center now because of the reason that we have moved towards a mobile app where the farmer used to book the appointment through the mobile only. Because all the farmers are registered on the mobile. So through the mobile, automatically the call goes to the all the doctors who are near the vicinity area, and any doctor is having the minimum call, the call is automatically diverted to him. So all the things can be managed directly, and all the cost of call center has been reduced for the last 2 years. So this is one part where regulation can work. As far as compliance are concerned, two kinds of concern for compliance, for legal compliance as far as concerned, again, complete MIS for that purpose, and where we are totally paperless office. None of the paper is moved from here to there. On my table, except annual report, you will not find a single paper. Because of the reason, number one, if certain cases are there, legal cases are there, again, these are handled by the software only, where everything is maintained, what is the due date, when the next thing is coming, etc., etc. Also, everybody is on an SAP, and we have developed many of the softwares where we used to get the ready-made report for the purpose of the compliances. If I talk about the GST, now everybody is knowing very well that filing the annual return of the GST is a big task. And this time in tax audit also, you have to define out of the purchases, how much is purchased from the regular dealer of the GST and how much from the composition. This is one of the requirement coming from Form 3 CD, I think requirement is there. But we have come up with all the situations because of the reason that we maintain our master data perfectly, and we got everything developed on the system itself, because now this is not a time to work on calculators or look for the various reports and again merging the reports and getting the new reports. This is the time where you need to have a pinpointing data according to your compliances, maybe compliances, legal compliances, maybe statutory compliances, or maybe the business compliances as well. So this is how we are managing the entire gambit of operations, where digitization on.
Okay, Abhijeet, I think you raised hands. You also, I think, want to add. Please go ahead.
So I wanted to add on compliance, saying that we use a compliance tool which will help us track all forms of compliances, like Manish said, be it statutory compliance, be it business compliances. So how are you compliant with FSSAI norms? So various elements are legal compliances. Everything is monitored through a compliance tool, and compliance is part of everyone's KPI. Okay, so that really puts responsibility and accountability on every function head to go and take compliance very serious, because India is full of compliance challenges. A lot more. Which compliance non-adherence will impact at what point of time is very difficult to predict. So we use a tool that gives us a comprehensive view, and that at the end of the month is a compliance dashboard discussed with all the function heads, so that they are aware of how the compliance situation and any necessary action to be taken at any point of time is known to them. That is what I wanted to share.
Okay, that is well laid down again, Abhijeet. The next question is from Varadarajan BS. He's saying FMCG industry, will that industry continue to be defensive industry? And this is, I think, certainly from the lens of CFOs having great, having been great communicators and sort of sound communicators to their investors. So does anyone like to take this question? Will that continue to be a defensive industry?
I don't know what the meaning of defensive for him is. The word itself has got fast, okay, and fast moving. So it always will remain an aggressive industry, far ahead of many other industries in terms of adoption of changes, be it digitization, be it compliance, because every moment as the consumer preferences change, FMCG will be the first one that will go and tackle the changes much ahead of many other industries. That's my view, and I do not know. So it will not continue to be a defensive industry. It will be the one which will be the first mover or fast mover in the segments.
So, okay, I thought defensive is like in respect to the stocks, perhaps, if I'm not wrong, but I'll take that. We will take certainly that answer. And Mr. Umesh, I think, had raised his hands, and so did Mr. Sanjay Agarwal. So we'll take quick perspectives from both those two in respect of whether FMCG remains defensive or not.
No, I tend to agree with Abhijeet that is not going to be a kind of defensive. The industry is quite resilient to the headwinds, whatever the challenges it has faced. And I believe in the long term, not even the short term, but in the near future, the company will grow. And it's not going to be defensive, it's going to be not going to be offensive, but it will be, it will be moving with the direction. So I'll not say 40-50%, but it is not a defensive industry anyway, as the word suggests.
Okay, so if I could just add this question before taking quick perspective from Mr. Agarwal, there is another question from Namrata Singh. She's asking that with the rise of e-commerce, with the rise of, do you think that the kind of surge that the e-commerce is now seeing, will that continue, or will we see consumers moving to back to physical stores, or would it be a sound mix of both, or will physical disappear? So yeah, Mr. Agarwal.
So I think the first question, maybe I think the question is more, is it a defensive stock as an FMCG? And maybe the answer is because from the stock market perspective, people look at it, businesses which are cyclical, steel and those which so I think that's where, yes, FMCG tends to be a little more sticky. Because the consumption habits of consumers, the food or the rice and the pizzas they're eating, or maybe the home and personal care products which they eat, tend to be a little more sticky, because that's where the power of brands come in. And hence, yes, it do become defensive. That the earnings and the profitability of the top line doesn't grow, is not volatile. So yes, it is defensive to that extent. Like in our case, it's home and personal care. We meet the daily essential needs of soaps and detergents, and therefore the sales is far more predictable than any other industry. To answer your second question about the e-commerce, see, the e-commerce surge has just happened, and again during COVID, it just grew multifold. But the way we look at it, I think all channels are doing very well, whether it is general trade, whether it is modern trade or e-commerce. There are certain categories which do well on e-commerce. There are certain categories, mass market products, which do well on general trade. So e-commerce, if you're targeting very niche set of consumers for your brands, yes, e-commerce become much easier for those brands to, there's a lot more comparison people can do on websites, and therefore e-commerce, the products which are sold, there are a lot of comparisons which you can do. So, all formats are doing well, and there is a lot more growth. Again, e-commerce can do, for all the reasons we spoke on digitization. So we see it's again an important channel for us.
Okay, the next, I think, two quick questions, if I were to just quickly take it from the audience, for Ashish. So Ashish, if you could just share your experience in terms of how the companies are today meeting ESG targets, and second is, I think there is a specific question directed to you, which is there is a question asked by Mr. Puneet Ahuja. He's saying we seem to be having surplus rice for domestic market, and the rice exports have been banned. Do you have any statement?
Yeah, I can clarify that. So first, only a certain variety of rice has been banned for export purposes. That's a broken rice, right? So that accounts for only about 15% of the total rice export from India. So overall rice export, other than that variety, continues as is. In terms of ESG, let me just share some interesting data with you. So studies have shown that around 4,000 to 5,000 liters of water is needed to produce 1 kg of rice, right? So therefore, it's a crop which has a huge impact in terms of the water table in the country. So amongst the other things that we're doing, this is one important area where, we even before the ESG movement came about, we connected, we work with around 90,000 farmers across the country, where we support them in planting better seeds. And one of the aspects of this better seed is lower water requirement. So that's an effort that was already on. We've accelerated that. And then besides that, because it's an agri-facing business, there are a lot of opportunities across the entire value chain, a lot of projects that we are looking at right now, but the pharma initiative is the key one that we are doing from an ESG perspective.
One more question to you, and that is that is by Mr. Radhakrishnan Chonath. He's saying, what will be the potential impact of the increased penetration of private labels on the FMCG industry? So this is more from a larger view and not necessarily a rice view. Yeah.
No, I think it's a good question. See, especially in the context of a product where you are competing with the same product being sold loose, right? So in the journey from loose to package, there is a sort of pit stop in between, which is private labels. Now, while this was not so important maybe 5 years ago, it becomes more and more important the more organized retail spreads. So organized retail, whether e-commerce or in large format, gives the retailer power to launch their own products, and which can very well meet the demand of what the consumer is looking for. So, I mean, it's certainly on our radar in terms of how that strategy works for many of these players, and it's kind of going to become more and more important in the future.
The next question that we would quickly take from our audience is from Rajesh Podari, saying, what is the one potential key risk which can derail the 5-year growth story for FMCG business? So, Mr. Umesh, you want to take that? One potential key risk which can derail the 5-year growth story for FMCG business.
It's a very, very, very tough question. So identifying one single thing, but I think the quick change of the consumer behavior is one of the very challenge to keep meeting your consumer demands and keep meeting their expectation over time is, I think, one of the growth engine that unless and until we able to meet the consumer expectation over time, we can't grow. So I think quick change in the consumer behavior and consumer tests are going to impact, maybe could be one of the reasons which may impact the growth of these sectors.
Okay, consumer behavior, changing consumer behavior is what you, I think, simply said.
Yeah,
next,
test. Yeah.
Okay, great. So next 2 quick questions. In fact, if I were to quickly take address to Manish. Manish, how does the road ahead for Amul look like in the backdrop of online B2B marketplace? And second again is specifically addressed to you, which is the dairy going to shift to organized players in the next 5 to 10 years? So both seem to be tough questions, I think. You would like to take that, Manish?
Actually, B2B market is concerned, as per our structure, we used to sell the items to our distributors. Okay, and distributors sells to retailers, retailers sell to in the market. In the entire scenario, we are having right now, we are having our own system where we get the stock, we get the demand from the distributors because we directly sell to the distributor. We do not sell to the retailers, right? So we directly get the demand from the distributor. Not only that, we are able to see which distributor is having how much stock of how much item. According to that, we used to push the dispatch to them after getting their confirmation, and we try to reduce the gap between the stock in transit. Secondly, we do not want our consumer, distributor to stock much, because if there is a high stock is there, then the cost of the distributor will be increased. So as far as B2B is concerned, we are having our own ecosystem through which we are controlling the entire B2B business. This is about me, myself and my distributor. Now coming towards competitors. As far as Amul is concerned, there are certain products where Amul has got mastery, because like if I talk about the Amul butter, or if I talk about the Amul cheese, or I talk about the chocolates, or if I talk about the ice creams. So again, the B2B is concerned, again, because of the unique product of the Amul, and secondly, because of the entire ecosystem of the Amul itself, we are able to manage the B2B business accordingly. So now what is your, coming towards your second question, please repeat your second question once again.
Second question was, in the next 5 to 10 years, are we going to see more organized players, grabbing the market share of the entire market?
Actually, I'm a bit disappointed with this, with answering this question, because in last few years, only big players has grown very well. but unstructured market and small players have been wiped off during the course of the corona. I can say because of the reason because we are procuring the milk in our milk shed area, and during the corona period also we had a lot of milks availability because all the small players, all the unorganized sector was totally wiped off. There was nothing, and all the milks are coming to us. That was one of the reasons. In coming years, yes, there may be a possibility some big players may enter in FMCG, but I don't. For small players, I still feel very difficult for them to sustain in the market and to work with the market. For big players, yes, there can be some big players can be entering in manufacturing also. So that may be a
big organized players can certainly take this share like of the dairy share, but small unorganized players is where you have reservations.
Very, very difficult unless the government provides some. They are given some further, some benefit. And that's another issue. Otherwise, for very difficult period for the small players.
Okay, Mr. Agarwal, 3 questions I'll also take that in specifically addressed to you, and these are first is I think this is from Rana Bhaumik. The audience, she wants to know how the CFOs are tackling this great resignation for their industry. So this seems a very interesting question in your fold, Mr. Agarwal.
Which thing?
How the CFOs are tackling the challenge of great resignation. Do you have any brahmastra to allay this question? I mean, to take this question?
See, attrition is always part of the business, but old established companies who are giving, and it may be a very cliche answer, but where their employees can find great value and where there is a care for those employees, I do not think that it is a concern for them. Obviously, any employee will look at certain growth for them. And if the existing organization can provide them the care and the growth and, the compensation and the challenges to them, then we don't see as a challenge, especially not in our company I have faced.
Okay, and the last question I think is, are we going to see more product launches in the times to come? Is one of the audience also wanted to know.
Yes, definitely there will be new product innovation, because that is how, one of the risks which you were mentioning and Umesh answered very well, that if innovation is not going to be there and, you're not meeting the demands of the consumer and the new changing demands, because the new millennials are seeing products which are available across the globe and they want to buy sustainable products. They want to buy products which give them far more value. And therefore innovations is going to be the key thing for the organizations to grow. And any responsible company who believes in building their brands will strengthen their brands by innovating on adjacencies and innovating newer categories.
Okay, so that is, I think, where we should leave because of the paucity of time.
Yeah, thanks, Manu, for moderating the section and the entire ETCFO team for organizing this event. So really, it was very interesting discussion with the co-panelists and the audience.
Thank you, all of you.
Thank you very much. Thank you.
Have a good time. Bye-bye.
Thank you so much. Thank you so much.